Hello, everybody. Tim Knight here. Hope you're doing well. It's kind of a quiet day. The ES is up 0.06%. The real meat of the earnings season kicks in tomorrow afternoon. There's like IBM, ServiceNow, Tesla, Alphabet, just bang, 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 big stuff. This afternoon, little quieter. Intuitive Surgical, Texas Instruments, not Mag 7 stuff, but still known. There's most of the action now is kind of what one might term as kind of the anti-dollar trades, precious metals, crypto, that kind of thing. There's some real action going on there. But in equities, NQ's down about 0.5%. Everything else is kind of sitting around waiting for earnings, I suppose. Let's jump in and take a look at some of the updated charts. As always, we begin with a spider. For a change, it's not at lifetime highs today, at least on an intraday basis. It might close at a lifetime high. Could. But as you can see, just kind of hanging out. I kind of wonder if this is correct because these candlesticks, you don't often see these doji patterns, which is where the open and the close are basically identical. So we had it yesterday. We appear to have it today. The market's kind of stuck, as you can see, if it does that, because what it's illustrating is that it opens and wiggles around in the day and kind of dies down and closes right where it started. So a lot of smoke and no fire. The diamonds are up about 1/3%. It wouldn't take too much to push these to lifetime highs, but they've been kind of stalled out. We're basically been trading all month long at the same spot. Here's July 1st. That's where we are now. Day after day, little up, little down, little up, little down, just kind of hanging out. The explosive move seems to have terminated. Perhaps another headwind, which would become a tailwind if it was resolved in the bull's favor, is what's going to happen next Friday with this whole tariff deadline business. Small caps, IWM, are especially strong. These are up almost a full percentage point. They have not broken above their own resistance level, which I've anchored right here to the peak of July 10. As with the diamonds, ever since early July here, they've just been kind of meandering. No real direction, as you can tell. It seems that it's just like meme stocks and things like that are the only things with any real price action. The general stuff's just marking time. As I said, the cubes are a little on the red side. The cubes are down not quite 0.5%. Lifetime high intraday yesterday, lifetime close yesterday, lifetime high close. We've undone yesterday's gains, and just big deal. It just kind of went up yesterday, went down today by the same amount. As I say, really just marking time. And as I said yesterday, I think that Kathy D. Wood's magnificent outperformance of the cubes is probably about time to reverse. It's down, which is not a surprise because it's going to align with the cubes, but it's down about 0.6% versus about 0.44%. So a little bit of a slip in Kathy land. Over with the couple of big ETFs with interest-sensitive ETFs, sort of a tale of two cities going on here, because the IEF, which I've mentioned before, the 7 to 10 year Treasury bond ETF, it's looking more bullish all the time, and it hasn't quite broken out, but it's doing a good job of hammering out what might ultimately be a very nice bullish pattern. This has been in the works for about 40 months. So it's a slow goer, but it's getting there. If it can cross something like 95 to 96, let's call it 96, I would say that pattern would be considered complete. In sharp contrast to this, even though it's the same government, the same kind of instrument, TLT is looking more vulnerable. Now it's up today, but there's a sharp difference between that nascent bullish pattern, or nearly complete, really, bullish pattern, versus this, which is pretty ugly. So yes, they're both up. TLT's having a pretty good day, but this is a very vulnerable pattern, whereas IEF looks like a potential breakout if it can hoist itself above 96. Over in quantum land, some selling for a change. Just a couple to show you here. Here's QBTS, which is D-Wave, and it bit of a failed breakout here, because yesterday it did sneak above this former high. So intraday, new lifetime high, but not only did it fail that level, we've got a bearish engulfing pattern here. So yesterday's body gobbled up the action on Friday, and then it's augmenting that loss today with another slip lower. And these look like little wiggles here, but in percentage terms, these are pretty big. Just from yesterday, we've gone from 20.56 presently to 17.34. These aren't small moves. What is that, like 15%? I can't do the math that fast, but it's a meaningful double-digit percentage. And here's Qubit, QUBT, quantum computing, down about the same amount. And as I've said, as a chart, I think much more vulnerable than versus QBTS. Now, as I said at the top, the one sparkling area in the market today, and has been for a while, continues to be stuff that ain't the dollar. And I'm not talking about the euro. I'm talking about either old school safe havens like gold, silver, platinum, palladium, or new school like Bitcoin and Ethereum. Here's GLD. It's up not quite 1%, but more importantly than that, it's getting within a pretty close proximity to its lifetime high. So the lifetime high itself was achieved way back in April, to the day 3 months ago. And we got within a penny or two of it again back on June 13. And a day like today, tomorrow, if that's not too confusing, would do the trick. So we've had we had a very good day yesterday, a good day today. Give it another one, and you're off to lifetime highland. And of course, any asset, the psyche around lifetime highs is very different, because basically everybody's a winner. The only people that are upset are those who are either short it or sold it too soon. But the mass of people who own it are delighted, and it just eggs them on to buy more. And there's no clear level of resistance they have to worry about. So it kind of feeds on itself until there's no buyers left. Silver, a similar percentage price gain. And as I said yesterday, my target on this was 38.75. Little by little, it's about $3 more from here, which isn't too much. It's not even just a single percentage gain away, but that's making good progress as well. And then kind of an amalgam, not literally but figuratively, of these is OUNZ, which is kind of a mashup of gold and silver. Weirdly, it's up even better than either gold or silver right now for whatever reason. But just like with gold, it's getting awfully close to a new high there, 33.23, this lifetime high. So we are all of 17 cents away from achieving that. And it just, it's a small consolidation pattern, nothing like, say, this, but it'll do the job. It'll do the trick. A breakout from this would sort of ape what we saw down here. I haven't drawn a line down here, but kind of the same idea. Small consolidation pattern, and then once you get a day like this, you're off to the races. So that's OUNC. Longer term, this goes back basically for the past quarter century, back to the turn of the millennium. GLD has had kind of three broad phases. One was this very steady bull market from 2000 up until 2011. Then there was this long, and for bulls, nasty slog where, in retrospect, we can see we had a cup with a handle pattern formed. Just one of the prettiest I've ever seen, and very big too. And once it cut above not only the important chart level 2000, but the psychologically big round number of 2000, it was off to the races. And it blasted higher in short order above 3000. So we're getting in the neighborhood of 3,500 now. So we had bull market, cup with handle, everybody just sort of gritted their teeth and waited, and then finally new bull market, much younger and quite sharply ascending. Related to this a little bit is XME, which is the metals and mining ETF, which incorporates precious metals miners, but also things like copper and aluminum and such. That is at a lifetime high, up 3% today, having pushed above this former lifetime high set back in the Pleistocene of 2008. So metals are doing well. Oil not quite so much. USO down about 0.3%. Glancing over at the crude oil here, it's down about 0.53% on the front month. So that's been just kind of stalled out in oil land. A few odds and ends from the short side of things. AMD, even with the market in general green, AMD is slipping about 1.33%. It's well off the lows today, but we do have a new gap down here. It's modest, but it's something. So we slipped lower on this. A lot of semiconductors pulled that today. They were quite weak early on, and they've been recovering since then, but they're still in the red. Carnival, this one is up just a touch, but I'm keeping an eye on this level right here. It should probably be a little higher with respect to resistance. Let's just change that to our kind of more standard marking. So that's Carnival, CCL. Shake Shack up also about 0.3%, and very tight stop on this one up at 137.14. Here's IBM, which is off today a bit more than 1%. And we cut lower on this, tried to rally, but that stalled out yesterday, and we're slipping again on this one. So that dashed line is at 288.9. And as I mentioned, assuming my data is right, we should have earnings tomorrow on IBM, which should be interesting. A couple of others, Brinker International, which has the ticker symbol of EAT. And this one I pointed out maybe a couple of weeks ago. And so here's the lifetime high, pushed higher, got a lower high, and since then, very steady slide, almost every day red away from that lower high. And then one last one, surprisingly weak, Netflix. This one had its lifetime high just back on the 30th of June, right here. Since then, a lot of red going on. This has peeled off more than 10% of its value this month. And this day here, which was the only kind of meaningful rally in that time, that was just prior to earnings. And earnings came out, big fall afterward, recovery yesterday, and then poof, that went away too. So we've, as I said, cut down to a double-digit percent drop since just June 30 on that. On the earnings side of things, Intuitive Surgical this evening, ISRG, historically an exceptional stock, extremely strong, but its own lifetime high set back in January. No position on this, no particularly strong opinion. I do see kind of a nice diamond pattern cooking right here. So if this takes a big tumble, that would be interesting. But it's, no position at all. But this one, if pushed to guess, I'm thinking more down than up on this one. Texas Instruments down just a little bit. This is a horse of a different color. This is not a proxy for NVIDIA or anything like that. It's a very different kind of semiconductor company. It, like with most semis, is near its lifetime highs, and it's had a tremendous rally since that April 7 bottom. So that's going to be a big one to watch. And you can see this reflected more broadly. This is the SOXL, the leveraged bullish fund on semiconductors. To my eyes, this is looking pretty pooped in terms of its own rally, and a little less histrionic SMH, the just plain old ETF for semiconductors. This was at a lifetime high just yesterday. We had a shooting star on this. We slipped today. Not a big deal. It's a little bit more of a big deal if we can cut below this dashed line here, which was the former lifetime high, because this constituted a breakout. If this cuts below that, it's starting to kind of get a little crusty looking with the semi-rally there. Okay, well, good luck. I know a bunch of you probably are in earnings plays right now, but thanks for coming by, and I'll see you here on Wednesday. Good night.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.